The Porsche Taycan, sleek, powerful, and undeniably cool. But there's a dark secret hiding behind that stunning design: depreciation. And it's been absolutely brutal. As we roll into 2025, the depreciation counter for Taycans just keeps ticking up. We're talking more than a 46% loss compared to May 2022. That's almost half their value gone in less than 3 years. The entire EV market is feeling the squeeze, depreciating at rates that make their gasoline counterparts look like stable investments. But can this really go on forever? Or are we finally seeing a light at the end of the tunnel? You can now find used Taycans for a startling $50,000 to $55,000. It makes you wonder, how much cheaper can they possibly get before they're practically free? In this video, we're going to break down the latest depreciation rates and see if those premature signs of flattening we glimpsed 6 months ago have actually stuck around. Let's start with the high-level trends for the base and S models. Prices held relatively steady until mid-2022 and then crash. S models are down a staggering 46%, or $58,400. Base models aren't far behind, losing 40.2%, or $42,200. These are absolutely wild numbers, folks. It shows that higher spec models, like the S, are taking an even bigger hit, a trend we see across the Porsche lineup. The story's similar for the Turbo and GTS. Values are plummeting here too. GTS models are down 43.5%, or $76,000 from their peak. Turbos have lost a jaw-dropping 48.8%, that's $77,000. And Turbo S models are down 47.7%, or $84,900. These are extortionate rates, especially if you bought one new. The decline seems almost linear, with GTS down 26.2% last year, Turbo S by 20.4%, and normal turbos by 28%. These are some of the quickest depreciating models we've ever seen on this channel. So, can this go on forever? Will Taycans eventually be free? Of course not. There has to be a point where even these electric Porsches start to flatten out, and we might just be approaching that point. Looking at the average yearly depreciation, it's still extremely high at 24.3%. Values continue to collapse. However, and this is a big however, it's marginally lower than the 24.9% we saw in February. This subtle shift is driven by the Turbo S, Base, and S markets. Base models went from 22.3% to 21.8%, and S models from 28% to 25.3%. Yes, these numbers are still higher than an equivalent Panamera, which typically loses less than 20% per year. But here's the caveat. These are averages, and sometimes averages don't tell the whole story. We need to go one level deeper. When we split the base market by model year, we see a fascinating development. The depreciation curves for 2021 and 2022 cars are starting to flatten. The highest depreciation occurred from late 2022 to late 2024, but in early 2024, the trends began to ease. 2021 cars lost 20% last year, slightly less than the average. 2022 cars are also showing signs of flattening in the last 6 months. We're seeing these minor flattening patterns in other models too. For the S models, 2020 and 2021 cars depreciated slightly less over the last 12 months compared to the 12 months prior. The difference is small, but it's there. The same goes for 2020 and 2021 turbos, a clear flattening, especially in the 2020 market. Even the oldest Turbo S models are starting to depreciate slower. There's a clear break at the end of 2023. Based on these price trends, the worst of the depreciation might just be behind us. This good news is further confirmed by the market inventory data. Here we can see the development of carried over inventory. That's the percentage of cars not sold within 3 months. If this number increases, cars are selling slower, typically leading to higher depreciation. We can see that carried over inventory basically increased until the summer of 2023, then it decreased and stabilized. This perfectly matches the price behavior we just discussed and indicates a more balanced market. Furthermore, rates between 25% and 30% are similar to other luxury car markets. This means sellers are moving these cars relatively quickly, but it comes at a cost. They often need to discount them by 7 to 8% if they don't sell at the original asking price. In February 2022, the average discount rate for unsold cars was a brutal 9%, even hitting 11% for some S models. But since then, discount rates have decreased. The trend has been upward, and currently the average discount rate for unsold cars sits at 7%. While still on the high side, this upward trend again confirms that the worst depreciation in the Taycan market might be behind us. To wrap things up, Taycans are still depreciating at insane rates, with some cars losing almost 50% of their value since May 2022. Yet, after this long period of crazy declines, we're finally seeing signs that the oldest models are depreciating marginally slower. The market is balancing out a bit, something clearly reflected in the inventory data. Now, the Taycan isn't everyone's cup of tea. Personally, I think they look cool, but I'd probably never buy one for reasons other than taxation. But I'm sure many of you have been waiting to pick up a great value for money used example. If you're in that group, the upcoming year could be the first decent moment for your purchase, as long as you do it with your eyes wide open. Naturally, even the oldest Taycans will still depreciate, and you should expect to lose a substantial percentage on your car, but the data indicates it will be less than what we've seen so far and more in line with normal depreciation rates for high-value luxury cars. Something critical to keep in mind, though, is the warranty period. Some Taycans have reported issues. The general warranty is 4 years or 50,000 miles, but this excludes the battery. For the battery, it's now 100,000 miles or 8 years. This means the normal warranty for 2020 models is soon expiring. You might want to get an extended warranty pack for the car itself. When it comes to the battery, you could get close to the 100,000 mile or 8-year limitation. But crucially, to use the battery warranty between year 3 and 8, the battery needs to have a capacity of 70% or less. I couldn't find any explicit extended warranty packs specifically for the battery, but if anyone knows of such an option, please let me know in the comments. This is a huge factor in long-term ownership. So, what do you think? Is now the time to snatch up a bargain Taycan, or is the depreciation still too risky? Let us know your thoughts in the comments below. And if you found this video helpful, please give it a like and subscribe for more in-depth car market analysis. Thanks for watching.